Hey there everyone, and welcome to your weekly gold and silver price analysis. And we're taking a look at Bitcoin today as well. This is of course brought to you by Ainslie Bullion, Ainslie Crypto, and the gold and silver standard. Use the time codes below to go to your favorite part straight away. My name is Joe. Anything I say here is not financial advice, of course, just my personal opinion, not necessarily the opinion of the Ainslie Group itself. So let's start with gold, then do silver, then do Bitcoin. Of course, we need to take a quick look at where we were last week. This is gold. In last week's video are the lows in for gold. You can see right here, we had this uptrend line that we did break down. The positive though was that we had a quick rejection off this low right here. If I punch in a little bit, you can see this is on the daily time frame. You can see that we did spike back above into this range right here, but we did also break back down, but we found support right here. So I drew in this rectangular box, and I was saying last week that if we do come back into this area, don't stress too much. I would just want to see it bounce off this low right here. I wouldn't want to see it spike anywhere below the bottom edge of this rectangular purple box, because then we'd be heading down into this area and maybe testing the old low right here around about 1,975 US dollars. So let's take a look at where we've gone so far in that time. We'll pop on our indicators. Again, this is on the daily time frame, and on the indicators right here you can see quite clearly, and I haven't moved these, moved the dimensions of this box right here. You can see a very clear spike down. So far, so good. If you take a look on the 4-hourly time frame, it's actually a very, very clear move, almost to the cent right there at that $2,010 mark. And where does that coincide with? Let me just pop back onto the daily for you. That coincides with the high, that previous high back here in October of last year. So that's why I drew in the rectangular box right there, and you can see we spiked down just to that $2,009 area again, coming up to this area, matching this previous area of resistance back in October last year. And over the last couple of days, we've seen a nice move back upwards, and we've opened, we're a little bit green for today as well, so looking positive, but there's a little hurdle, and you can probably see that, but I'll just mention that in a second. Of course, on the daily time frame, what you can see, we broke up, and then we had a support level test at the top end of this rectangular box right there. But just yesterday I had this beautiful spike, and we moved 2017 to 2037, so almost $20 move in $20 US dollar move in one day yesterday. Came up to test this downtrend line. It did not close above it, so far we have yet to see a close above this downtrend line, and that's what I would ultimately like to see. But are we going to be doing that in the next 24 hours? Again, you can see right here, we've opened today. This is Tuesday, January the 30th, 2024 in Australian time, of course, Melbourne, Australia. Of course, you can walk into the Melbourne store and the Brisbane store. You can purchase online for your gold and silver needs at ainslieBullion.com.au. But it's just making a play to break out of this downtrend line right now. So that's what we preferably want to see in gold in the next 24 hours. We all want to see it be a green candle and spike and hold above this downtrend line right there. Now that's not out of the woods. That's a positive sign. Ultimately, what I would like to see in order for me to be certain that we are continuing the current rise and to start moving towards all-time highs and breaking all-time highs, I need to see it break back above this uptrend line right here. It needs to spend time above here, at least on the daily, and preferably closing on the weekly time frame. Now I'll get rid of this little circle right there for you. So that's really what I preferably need to see in this next week. Preferably, this is the weekly time frame, preferably breaking above and holding the week, closing the week above this area right here. So I'd love to see some more green action in the next few days. Probably a spike. You could imagine, of course it's might not happen exactly, but you could imagine something like this. If we do see a bullish week, continued bullish week for gold, you could see a spike up to around about this area of 2050 to 2060 US dollars around that area. You might even find a play here. Yeah, that's between that 250 to 260 area. So what I'll even do is I'll draw in a rectangle for you. So between this area here, you could see, if we are continuing to be bullish for this week, you would look at a range between 2050 to 2060 where you might top out at and then have a little spike back down. We just need to close. So we want to see this solid green line right here holding above this uptrend line right here. So that would be giving me confidence that we are continuing our upward movement in gold. So not out of the woods, but looking okay so far. We just really need to spike above there. Now, if this becomes or continues to be an area of resistance, you would look at the area back down to here as a support level. So that $2,015 level, I would say, would be a key area of support. Breaking back down through 2016, 2015, it's more likely that you take out this area of 2009. The more you test an area, the more likely it is to be taken out. So I would imagine if in the next week or two, again, you'll get another gold silver analysis next week, but just talking about it for now, if in the next couple of weeks you do come back down to this 2015, 2016 level, does not hold as support, that's more likely to be taken out here. As I just said, repeating myself out around about 2009, breaking that $2009 area again, which take into account is breaking through this previous resistance point, then I would say absolutely we're heading down towards this under $2,000 area, so around about that 1975 to 1980 US dollar level. But look, so far so good for the day. We just really need to see that climb above and hold above, at least on the daily time frame, this downtrend line for gold. Pretty short and sharp for gold. That's what we're looking at for this week, preferably spiking above and holding above into this area. And above this uptrend line is my preferable scenario. However, you might feel different, because are you looking to purchase more? Are you looking to buy the dip? Well, you want to see it go down more. But of course, most of us are in it for the gains over the long term, and obviously the maintaining of your purchasing power and hopefully gaining on your purchasing power over the longer period of time. That is gold. Let's take a look at silver, then we'll get to Bitcoin. Now, silver, bit of an up week so far. Well, last week we had this movement we were talking about right here. The fact that we're coming down to the bottom of this symmetrical triangle pattern. We really ultimately needed to see it hold. It has held so far. I thought we might get another little touch of this area in the last 7 days, but you can see we have not had that touch, which is actually a positive thing. So good that it's moving in the opposite direction. What you'll notice here on the relative strength index on the daily time frame is that we have moved. We went very, very close to the oversold territory. You'd almost call that oversold, and we're moving in the opposite direction here. So that's good to see, moving in the upward direction. On the relative strength index, looking positive. We have opened green for the day so far. We had this beautiful move. This is in the last week or so, that $21.90, $22 area, all the way back above $23. Great to see. Back above $23.20, which is also good to see, moving up on the daily time frame, a green candle, but we're just in this trading range right here. So there's a couple of trading ranges you can see. I'll pop this out onto the weekly for you. First off, you can see the two big Fibonacci levels. I've had these drawn in for quite a while. If you are new to the channel, welcome as a new subscriber. Just very quickly for all the newbies out there, I'm still using Fibonacci analysis from a very, very old high from 1980 and a very, very old low from the early 90s. I find that still to be quite predictive for the silver price, even in current day. I'll post a link above right now to a video about Fibonacci levels and the silver price. You might find that very fascinating. It just goes into more detail about how predictive this has been, at least for me. Again, not financial advice, all that sort of stuff. But let's take a look at the weekly time frame. You can see that big spike down there on the weekly, but we're just in that trading range. So I was talking about the fact that we are still trading in between, and I'll go back, that was the monthly, sorry. We are trading in between for the last, since about March of last year. So since March, we had this little spike down, but we've been trading between this Fibonacci level and this Fibonacci level for nearly an entire year. So just this trading range. So that's the first trading range between $20.50 and the infamous $26 level. And then the other little trading range we've been in, and this has been for a while now, is this symmetrical triangle pattern right here. So we're in two trading ranges, and we've got to break out eventually. My gut feeling, as I said last week, I should say, it's coming to a head. I mean, this will make its decision. Might get a little bit tighter and tighter, but you've got till, I would say, August, September, and we will have made that decision. Quite possibly earlier, could be looking at around about May when we make the decision either way, but it will make that decision. You can't just get tighter and tighter in price. It has to break out to the upside or the downside. My bullish nature on gold and precious metals in general, I'm going to say, just from a personal point of view, obviously I'm bullish in the long term for silver, so I'm going to say that we are going to break up. Obviously not a guarantee, but a healthy dose of optimism is always good. So let's look on the positive side. So let's say for now, moving to the higher side. Of course, we need to look at the weight of evidence when we get there, but good to see that we are moving up at least this week, but we're just in this trading range. So really the hurdles we need to get over within this trading range, right here, this horizontal level, you can see this little area of resistance, this cluster right here, and that's at $24.50. If you have been watching me for a while, I had this level of $24.50, between 24 and 24.50 drawn in actually for quite some time, but I got rid of the rectangular purple box. But I'll pop that in right there. You can see, to get out of this range, or to be confident that we're breaking up instead of breaking down through this symmetrical triangle pattern, it has to break up through $24.50 US cents. So watch for that. If we break up and hold above that on the daily, but in particular on the weekly time frame, if we break up on the weekly and hold and close above on the weekly above 24.50, I'd be very confident that it is not a fake out and that we'd be heading to break this area here. Once we break this symmetrical triangle pattern, of course, we're talking about the infamous $26 level. Been talking about that for a very long time. 26 got to break above 26. And again, for the newbies watching, new to the channel this week, the final hurdle for me, $31.20 in US dollar terms. That's the final hurdle for me to say the bull market is absolutely on a tear, and we're going to break all-time highs in the months and years ahead. We're just not over that hurdle, and we're not over the infamous 26 long-term resistance point. We've talked about it many times before. That's a very, very big line in the sand. But watch that 24.50. That's what we need to hold and close above, at least on a weekly time frame, as I said, in order to be confident that we're breaking to the upside of this symmetrical triangle pattern rather to the downside. If we do break to the downside, then you're looking at retesting this low here of $20.50, $20.60, and you've got my other low target for 2024 as well. That's at $17.70, $17.80 right there. Definitely not saying we're going there. Definitely not saying we're going there, but these are the levels you need to be aware of with a healthy dose of optimism for a break to the upside instead. Best to be optimistic. That is silver for this week. We'll see what happens in the next 7 days. Of course, if there's anything in the meantime that occurs with the silver price or the gold price or anything with the Bitcoin price or other cryptos, I can do a little mini video, or also head over to our Facebook channel, also our Twitter channel, facebook.com/Ainslie Bullion, twitter.com or x.com/Ainslie Bullion, because we'll do little screenshots and small micro price updates in between your weekly big analysis. So make sure you're following us on all our socials for those little mini updates in between. That is silver. We're skipping platinum this week. We're going straight to Bitcoin. We haven't done it for a few weeks now, but let's take a look at Bitcoin. This is the big index price. This is an amalgamation of a few different exchanges. So this is the Bitcoin index, which many people use, and this is my chart. Now, if you want to, you're more than welcome to pause this video right now and take a screenshot. This is what I use personally. I use a Fibonacci level going from the old high, and I still think it's quite valid, going from a old high back in the peak of November of 2013 and the lows back in 2015. I still find them to be a good prediction tool so far. It's certainly predicted the move up to 20,000 in 2017, and while it didn't pick the exact top in 2021, you can see it has acted as there have been levels of support and resistance since 2021. So, for example, a cluster of support here. You can see a cluster of support there, particularly when I move down onto the daily time frame as well. Clusters of support and resistance. There's that spike down in November last year, and areas of resistance as well. So that's why I've kept it in. I did have the top here, not the top, but I did have a level right here of 51,000 US dollars, which I thought may be an area, round about an area of resistance before the halving of this year. If you don't know if you don't understand the halving, just Google Bitcoin halving and its impact. Basically, in April this year, there'll be a halving in the Bitcoin price, meaning the supply of Bitcoin will halve to what it currently is, and it's halves down to, I think it's 3.125 Bitcoin per block mined, or per mining reward, I should say. So the supply of Bitcoin halves every 4 years, and that halving is coming up again. What you will notice is that after a halving, over the last couple of cycles, or last 3 cycles, after a halving comes a big rise in Bitcoin to new all-time highs. So that's the halving in 2016, big rise, and then a peak, and then a fall. Then people get ready for the next Bitcoin halving. People buy in anticipation. There's sometimes a bit of a dip before the halving, and then after the halving, another new all-time high. If history rhymes, doesn't always repeat, but if it rhymes, or if it does repeat, many people believe that will occur also. So we're coming up to the halving. Many people believe that after the halving, maybe from 1 month, 2 months after the halving, that's when we may start to see the next 1.5 year, 2 year run in Bitcoin. If it does go according to how it went previously, so if it does rhyme or repeat, around about November, December of 2025 is when you could see the peak. That again is based on if it does rhyme with the peaks of other cycles. You can see in the last 2 peaks, November, December, this kind of rough area here, and November, December roughly was the peak in Bitcoin in the last 4 years. So 4 years from there, it's around about there. So the reason why I'm mentioning all this is because we are close to the halving, and sometimes you find a bit of a sell before the halving. So here we are, we've come up to close to that 51,000 range, and let's see what has happened in the last week or so. So we've had that spike down to the area of 38,530 US dollars, at least on the index price right here. Technically the low, yes, 38,524 US dollars. And in the last few days, we've had this spike back up. Many people believe that is it. There are some people that are calling for an all-time high before the halving. Now, I don't think that's occurred beforehand. That's never occurred in Bitcoin history, at least in the last number of cycles, the last 2 or 3 cycles. So many people, or some people, are calling for a break of the all-time high before the halving. I'm less likely to incline that that is true. I believe history probably more rhymes than that. So we've been talking about this uptrend line right here. So the question becomes now, is this the low before the Bitcoin halving? Not in evidence for me just yet. What I would personally need to see, again, not financial advice, not necessarily the opinion of Ainslie Crypto or Ainslie Group, but for me, I would need to see it break back above the monthly high from December at least. Now, on the positive side for Bitcoin, we had this big spike down, and this was a big red candle back here down. So it was looking not great for Bitcoin, but since in this last week, we've just rocketed right back up. But it is a green wick for the month of January. However, for me, I would need to personally see it break above and hold above, close above for the month. So in the next 24, 48 hours, above this level right here of 44,600, 44,700. If you want to comfortably call it 45,000, let's go with that. But I'm going to pop in this horizontal line right there. I would really, in order to be confident that we may be seeing even higher prices for February, and to maybe even give credence to the all-time high before the halving, don't think it's happening, but to give credence to a higher prices in February, I need to see it break and hold above, close above this $45,000 level. So that's my opinion. Let's have a look at the Fibonacci from the recent high and the recent low. Is there anything we can glean from that? So let's take a quick little look. Right here's the spike up to that 48,000, 49,000 level, and we'll take it from that low. And see, we haven't even cleared yet the 61.8 level right there. And there is, and interestingly right there is that level I just drew in. So that's the high from December at that 44.6, 44.7 area. And right here, it's very close to a $45,000 level, which happens to be one of the golden ratios right here, the 0.618 Fibonacci level. So that gives an area of confluence for me, and I'll draw this in for you guys. Let's see where I can do that right there. Let me draw that in. It gives me definite room to think that that is going to be your resistance point moving on the way up. So somewhere between that 44,700 to $45,000 area. Look for that as a potential big area of resistance. Hopefully, if you're in Bitcoin and you don't want to load up anymore and you only want to see it skyrocket from here, hopefully we break above and hold above that area, that 45, particularly this, right there, 44,960. Let's call it comfortably 45. In order to be confident that we are possibly heading up in February. But do look for this area as an area of potential resistance. And if this is a big area of resistance and we are moving down further and down back below this recent low right here, what are we looking at? I'll pop it off right here, get rid of the Fibonacci for a second. You can see that green circle right there, and that horizontal line is my area of resistance to watch out for. And again, we've been talking about this uptrend line right here is on the weekly time frame, uptrend line, where you could very easily see it come down and test that one more time before the halving. So that is quite a likely scenario. I would say that's a equal scenario as moving higher from here. So very likely, or not surprising, I should say, that we find that resistance level at 45 and come back down in the next few weeks to test this uptrend line right here. If we did that in the next few weeks, you're looking at around about your 33 to 35,000 US dollar mark. Also, because you can have spikes and then closes above, just take a quick little look at that previous Fibonacci level right there. It happens to match exactly with this previous area of resistance at around about 31,700. Again, on this particular index, it might be different on the particular exchange that you are using. You could even potentially see a move down and a quick little daily spike down just to come and fill that little gap right there and match that previous area of resistance back in July of last year. So am I saying it's definitely heading down from here? No, but I am saying that watch this $45,000 area. You want to see it break above and hold as support. If it is resistance, consider it might be coming back down to this $33 to $35,000 area. Now, I am personally more confident that we would find support around this area rather than breaking down and heading down into lowers and your 12,000s, your 10,000s, your 8,000s. I don't think that is likely. I would give that probably a 10% chance, in my humble opinion. I think history will rhyme in this case. We may find some support around about here. And then after the halving, if history rhymes, and there is no reason to think that it won't, particularly with the Bitcoin ETFs and the hype around Bitcoin again with the halving, I think in the next number of months, and particularly over this next year, we are going to see new all-time highs in Bitcoin. If I'm wrong, of course, I will admit to being wrong, but again, if history rhymes, it's looking very good at this point. So really the thing you need to think about is, if you're not in Bitcoin right now, if you're not in crypto, particularly if you're not in crypto, start with Bitcoin, probably the best one to think about. And don't try, and this is not financial advice, but in my humble opinion, don't try and time the bottom. Don't think, oh, I've never bought Bitcoin before, I'm going to wait. I'm going to listen to what Joe says and wait until it goes down to $33,000 to $35,000. US might not be the best idea. Consider just dollar cost averaging. Of course, if you don't know what that means, it just means buying regularly every paycheck, once a week, a certain dollar amount. Don't worry about what the price is at the time, just buy regularly, and then you're averaging your cost in as you go. So for example, if the price just over the next few weeks heads further and further down to this area here, that's okay. Maybe you bought some here, maybe you bought some here, maybe you bought some here, and you averaged your cost down. Similarly, you're averaging your cost on the way up as well. Tends to be the best strategy that most people, most investors talk about. Don't try and time the market. Dollar cost average is your way to go, but I do want you to keep an eye on these key levels that may give you an indication of where the price may be heading in the next few weeks. So those are my targets for Bitcoin. We've talked about gold and silver as well. Of course, head over to ainsleyBullion.com.au for all your gold and silver bullion. Head over to ainsleycrypto.com.au if you want to purchase crypto through Ainslie. We've been doing that, offering that service, buying and selling Bitcoin from customers since 2017. So we're very much in that space as well. We have very knowledgeable people to help you with anything crypto related as well. Of course, next week you'll get another weekly gold and silver analysis. I may take a look at another crypto next week. Post a comment below if you want to see a particular crypto get analyzed. Maybe I'll look at Ethereum again, or maybe even one of the meme coins. Is there anything you want me to have a look at? Post a comment below, but you'll always get your gold and silver analysis every single week. Thank you very much for watching. Balance your wealth in an unbalanced world. Take care, and we'll see you next time.